Just last week, over $1.8 billion flowed into US Bitcoin spot ETFs, the biggest weekly inflow since these products were approved earlier this year. But here's the thing, that money didn't come from retail traders or social media hype. It came from institutions, names like BlackRock, Fidelity, and Franklin Templeton. These aren't firms that chase headlines. They don't follow the trends. They shape them. So when they quietly move billions into Bitcoin without fanfare or press releases, you have to stop and ask, what do they see that others might be missing? This isn't some random bet. It's part of a broader, long-term strategy, one that's been building quietly in the background. Think regulatory clarity, think hedging against macro uncertainty, think digital assets finally stepping into the financial mainstream. Back in 2020, Wall Street was still mocking crypto. Fast forward to 2025, and they're not just paying attention, they're buying in. Let's take a closer look. Who's really behind this wave of inflows? It's not just the big asset managers. We're talking pension funds, family offices, sovereign wealth funds, even the more conservative institutional players. These are the giants of finance operating in trillion-dollar arenas. They're not in it for the hype. They're in it for long-term positioning. And to them, Bitcoin isn't some fringe experiment anymore. It's become something else entirely. A non-sovereign, inflation-resistant asset with a track record of outperforming and increasingly moving independently of traditional markets. At this point, over a dozen white papers from major financial institutions have started calling Bitcoin what it's becoming, an emerging macro asset. The old playbook, the classic 60-40 portfolio, is showing cracks. Bonds aren't pulling their weight. Cash is quietly eroding, and in that gap, Bitcoin offers something unique. Asymmetric upside, true scarcity, and resilience in a world drowning in debt and relentless money printing. But here's what's really changed. Access. Thanks to these new regulated ETFs, institutions don't have to mess with wallets or private keys or crypto exchanges. They just buy the ETF, and they're in. Simple, clean, and finally compliant. So, if Wall Street is moving into crypto, why isn't it front page news? Simple. They don't want it to be. Not yet. Institutions don't broadcast their moves. They accumulate quietly to avoid slippage, avoid hype, and most importantly, avoid driving up prices before they're fully in. For them, the perfect environment is one where sentiment is low, volatility is calm, and retail is on the sidelines. Just think about it. When BlackRock files for an ETF, it makes headlines. But when they buy through that ETF, you won't hear a word, not until those quarterly filings come out months later. In public, you'll hear safe, measured phrases. We're exploring digital assets or keeping an eye on blockchain. But behind the scenes, they're already deep in, meeting with crypto custodians, testing integrations with DeFi protocols, setting up exclusive private funds that only a select few can even touch. It's stealth mode, a deliberate delay, because once the headlines catch up, once CNBC is shouting Bitcoin hits $100,000, the play will already be over. The early positions, taken, the outsized returns, already claimed. Let's be clear, this isn't some speculative pump. BlackRock didn't spend years building an ETF just to chase a meme coin rally. These firms don't operate on hype. They think in decades, not days. Behind the scenes, they've been lobbying the SEC, locking down relationships with custodians, and designing airtight compliance structures, all to support the quiet, steady flow of serious capital into Bitcoin and the broader digital asset space. What we're seeing now is the result of that groundwork. Bitcoin isn't being treated like a trade. It's being positioned as a foundational macro asset. Some are even calling it digital oil, fuel for the economies of the AI-driven future. And it's not just Bitcoin. Fidelity is weaving Ethereum into retirement plans. Franklin Templeton is tokenizing US Treasury funds right on public blockchains. Invesco is exploring how to tap into DeFi. This isn't just adoption, it's reconstruction. The old financial guard isn't dipping a toe into crypto, they're laying new foundations on top of it. So no, this isn't a pump and dump. This is a calculated land grab for control of the next financial frontier. The real question isn't if institutions are buying, they are. The real question is, what does that mean for you? If you're already in crypto, congratulations, you're ahead of the biggest capital allocators on the planet. And if you're still on the sidelines, you might be watching one of the greatest financial shifts of our time from the wrong seat. Think of Bitcoin in 2025 like the internet in 1997. The tech is maturing, the rails are built, regulation is finally catching up, and behind closed doors, the next global financial system is already being assembled. Retail investors have a window, but it's closing fast. Just like with gold, oil, and real estate, the institutions that once laughed at Bitcoin are now quietly cornering its supply. So if you're seeing this, ask yourself, are you waiting for a mainstream headline to tell you it's real? Or are you ready to move before the wave hits? Because the smart money, they've already made their move, and the quiet accumulation phase is almost over.